So here we are again, guys, talking about Nike. Now, Nike, it is down again. As of today, recording, it was down about 5.46%. Now, the question is, what am I doing with this stock? Now, Nike just reported their Q3 2025. Again, weird quarters for Nike here. Quarterly earnings here, guys. And there's a bit to talk about, so I'm going to give you a little bit of my thoughts, what I'm going to be doing with the stock, whether I'm going to be buying more, things like that. So what I've got here, we're going to go through this quickly here first, is I have Q3 2025, I got a year over year change, and I also got the last two quarters, which is not usually something that you see. In terms of revenue, now we're looking at about, probably in line of what we were thinking, down about 9.33% year over year. Of course, as well, this has been the lowest in the last three quarters, but we still pulled in $11.26 billion in these times where they're really trying to clear channel inventory. They're really trying to get their new innovation out. They talked a lot about in the conference call about how they are essentially taking back some of the merchandise that's not selling, and then they're going to be putting in sales channels like their discount sale channel to get rid of it. So that's why you're seeing the revenues go down quite a bit. I mean, volumes are for sure going down, but they're taking lower costs, and they're saying this is, excuse me, guys, this is a plan, and this is gonna, well, we're gonna talk about this more in a bit, but this is gonna get to probably its peak in next quarter, and then it's gonna stop. And hopefully go around in the other direction. In terms of COGS, cost of goods sold, 6.5 billion. This is down 3.9%. Not great that it's not down as much as revenue. I mean, revenue is down over 9%, but of course, there's a lot of aspects in this that kind of are, they're not really variable. Some of them, right? So that was, it was about in line from the last few quarters as well. Gross profit was down 15%. And again, that's, if you're wondering, if revenue is down 9%, COGS are down 3.98%. Well, we're down 15% less because we're probably seeing lower price points. Excuse me again here, guys. Lower price points in their products. So that's definitely reflecting in the gross profit there. And their gross margin was down about 326 basis points to 41.5%. Again, it was pretty nasty. Last three quarters is one of the worst as well. Total selling and admin expense, this was down 8%, so not quite as much. Keep in mind in here they have their demand creation expense, which is something that they should be focusing on as a company because it's kind of like their bread and butter of the company. They have their overhead as well. So that's something to keep in mind with that. But down about 8%, so not as much as the other, but keep in mind that a portion of that's really important to Nike. A couple other things, they had some income for interest expense, 18 million, other expense income of 38 million. So their income before taxes, 844 million, and that was down almost 40% year over year. Income taxes we've got here, and then net income was 794 million. So still 794 million dollars, down 32.25%. And over the last few quarters, yeah, that's a hit for sure. Diluted EPS was 54 cents, and that was down 30%. Why is this, not as extreme as the other? Well, of course, because they're buying back shares. That's going to boost their earnings per share. And we're going to talk about that in a little bit here because that's something that's quite important as well. So overall, it was a pretty bad quarter, what we were expecting. And we're going to talk about how this is going to be going forward. Now, to give you guys a little bit more of insight, now this is not revenue, this is earnings before interest and taxes. This shows you the different areas, specifically China, they're having quite a bit of issues. It's down 42%, and this is earnings before interest and taxes. So keep in mind, that's just something I want to talk about. They're saying how it's a lot more competitive there. It is, but they're basically focusing on all these areas. But that's something to know for sure. Now, in terms of something that we don't know, well, we know things are bad. We knew this as well, but something I want to keep talking about. So while I hold this stock, Nike will continue to pay a dividend. It says here, Nike continues to have a strong track record of consistently increasing returns to shareholders, including 23 consecutive years of increasing dividend payouts. So right now, what is it here? It's about 2.36%, not a huge dividend, but you're getting a dividend while you're waiting on your money. In the third quarter, the company returned approximately $1.1 billion to shareholders. That was just in the third quarter. And keep in mind that this is roughly a $100 billion company, right? And just in this last quarter, they did over $1.1 billion. Of that, dividends was $594 million, up 66% from the prior year. That's what we just talked about. And share purchases were about $500 million. So they're buying back, boosting that EPS, a large portion. This reflects 6.5 million shares retired as part of this 4-year, $18 billion program. And now, I talked about this in my last video. That was approved by the board of directors in 2022. So $18 billion just for this program. And like I said, this company has only got a $100 billion market cap, roughly. So it's a pretty big dent in the shares. And so that's something that I really like to see going forward. So this video was kind of just a quick update on the earnings. A lot of this we expected, right? My last video, if I go a little bit more of a deep dive into the company, why I'm buying, valuation, that kind of thing. But this was kind of a quick update. And in terms of the conference call, just a couple things that you might not have known. Now, they're saying Q4, which is next 4, is going to reflect the largest impact, and then it's going to moderate from there. So that's something to keep in mind. And this is to do with, of course, like I said, they're trying to clear channel inventory. They're cutting prices. They're doing promotions. They want to stop all that. They're going to be doing new innovation. They talked about a couple different products that they're going to be implementing. It looks like they want to change, not only selling more to wholesalers and improving those relationships that were kind of destroyed before. They actually want to improve the product as well, and they want to get some new fresh product out there. So keep in mind when we go into Q4 of this year, that we're going to see it bad again, and then from there it's probably going to moderate and get better. So specifically next quarter, they're saying Q4 revenue is going to be down mid-teens in the low end. So revenue would probably be down 12%, something like that. Ouch, margins are going to be down 400 to 500 basis points, 4 to 5%. And again, keep in mind, we've already had these margins really come under pressure, but they're getting aggressive. From listening to it, guys, they're getting aggressive with clearing this channel inventory and doing this turnaround, making this turnaround, right? And of course, you probably heard it on the news. You read about this, the big T word with Donald Trump there, the tariffs. So keep in mind, though, this includes the impacts from the new tariffs from China and Mexico. So that's why I think we've seen some of the reaction that we've seen in the stock, although we knew this was going to be happening. But those are reflected in there. So given what they're telling us, max pain, I feel like we've kind of reached max pain. Next quarter might be max pain if people are not paying attention to what they're saying right now in their conference call. But if you know anything about investing in stocks, this is when you invest. You invest when nobody wants the stock, right? When this thing was like $150 a share before, now it's 67. Maybe it'll drop a little bit more. These are the times that you get in. You get in before it bottoms because nobody knows when it's going to bottom, right? And like I said in my last video, this is a multi-year thing. This could be 2 years, could be 3 years, maybe even a little bit longer. But generally, as I like to say, a doubler. This is a doubler in my opinion. So if if it drops a bit more, I think I'll buy more. This is already a very small position for me because I'm not super educated in this space, but I think I know enough to make an educated guess as to what's going to, it's not really a guess, but an educated prediction as to what is going to occur, especially considering how stocks respond and how I think the economy is going to be going forward. I think that if I didn't get in now and wait it out, I'd kick myself, especially when it pays a dividend and they're buying back. They're buying back so many shares, right? So it's attractive. It's going to be interesting to see what happens going forward. Next quarter is not going to be really interesting for me because I'm kind of expecting what's going to happen. But after that, are we going to see this turnaround happen? And then when we start comparing to these quarters right now that we're going past, Like, wow, it's gonna be interesting times. So I'd love to know what you guys think. Tell me what you think. Do you think the stock's going to drop further, or do you think we're going to be going up from here? And that's going to be it for today, guys. And I'll see you in the next one.